What a weekend. Like, I can't even fathom how many times we've seen this over and over and over again. You get the big red open on the futures on Sunday night, and it looks terrible. It looks like we're going to head lower. It really does. It looks like we're going to head lower, and it looks like we're going to finally have that correction that everyone's been anticipating for a long time. And then, boom, we're back here. We're green. Guys, I'm cool with it. I'm cool with these games the market is playing. I'm fine with it. I'm not trying to short it right now. I'm not trying to go crazy on the long side. I mean, I'm always long most of the time, but actually all the time I'm long, but it's just uncanny how many times this happens. And over and over and over again, people try to short stocks. Like, look, the market looks bad. Okay. I'm not going to lie. It looks bad. The Qs are trading near the 200-day moving average, or at least it was last night. The SPY was at the 200-day moving average yesterday. Everything looked like it was going to fall off a cliff. Oil is still over $100, I believe. And things don't look like they're going to be resolving anytime soon. Like, this is a terrible market. But this is the game that we're in, guys. Like, this is obviously not going to be flowers and roses every single day. There's always going to be a catalyst to go to the downside. The thing is that I'm fairly surprised about is that we just cannot break down. Like, we literally can't break down. And I could understand how frustrating this would be for people who literally are trying to short the market. Just super frustrating. But I digress. I am not short the market. I don't think I would want to short the market until we get some serious confirmation that we're actually breaking down, even though the charts look like crap. But I mean, let's have at it, guys. Let's have at it. What is going on, everyone? How are you? If you can remember, I said last week my voice was a little bit raspy. I got a cold. My voice went away. I'm recovering a little bit today, but I got to hold down the fort, guys. I got to hold down the fort and bring it still to all you beautiful people out there. I sound like crap. I could tell I sound like crap. It sounds like I sound like crap. But here I am today. Nevertheless, what is going on, my boy Nicholas, Mosh Stocks, iTech? How are you? June, how are you? Yeah, hello, everyone. Hello, June. Yeah, so it's been like just a wild weekend. I mean, it was like every single headline this weekend was like, guys, we're going to have a crappy open. And we had a crappy open. And then it recovered. Like, it's so funny how this keeps happening over and over and over again. And then we had additional things happen over the weekend and late last week, of course, when I was not streaming the market. We had MRVL Technology reported earnings. Now, this is actually a very interesting story because I got to be honest, I was long MRVL for a long time. I was buying the dip back last April, which is like a year ago, which feels like it was just yesterday. And I sold MRVL around 85 bucks. And here I am again today buying MRVL. And you know what, to be honest, it's a very compelling story because now they're part of the optics chain, which we've seen with a lot of Coherent, Light, and also AAOI. And it's pretty interesting because if MRVL is turning into that type of company, in addition, they have the retimers for, in other words, speeding the network as far as any inference that we have through cloud technology. Like, maybe this is the real play. Now, I don't want to get too technical here, but we'll look a little bit more into that later on. Also, we have software and semis. Today is a little bit different because I've been looking at this ratio for a long time, and it really looked like semiconductors were leading the market, which they have been for the last few months, and software was getting decimated. But just a couple weeks ago, we had that ratio flip, and we're going to take a closer look at that one, and then we're going to have solid talk, okay? What exactly I'm thinking, where do I think the market's going, what I'm seeing in the market today, possible long ideas, and so on. And, you know, I'm always transparent and blunt as far as like when I'm longing, when I'm not longing, when I'm shorting or anything like that. Right now, I'm not shorting anything, but let's go ahead and get on with the show. So obviously, I don't need to get into the specifics as to where we are in this war. The war is getting worse. There is more bombs being dropped everywhere. They're starting to target oil facilities. At least Israel's starting to attack target Iran oil facilities and back and forth. And the Strait of Hormuz, which is obviously the biggest topic lately and probably was the most obvious thing that was going to happen. And honestly, this is probably the ace that Iran decided to lay down on the table very early in the game. But we'll get a little bit more into that solid talk. But At the same time, we did receive some news last night, and I was looking at the markets like all last night. I was reading on a lot of stuff that had to do with the war and everything because I wanted to kind of be an expert on this, which I'm definitely not an expert when it comes to the war and oil and all this stuff. I just want to have a good understanding so I know how it actually affects the market. Because at the end of the day, if it doesn't affect the market, I don't really care. Like, why would I care? I'm here to make money. So if it doesn't affect the market, then it's probably not anything I want to keep on my radar. In this case, this actually does affect the market. So let me just bring up the post that I had yesterday. Also, I want to play this clip from CNBC as well. That's going to be a little bit discussion as far as the risk that we're going to have to the downside with the markets and upside with continue to rally. They actually summarize this pretty well in CNBC. So I'll go ahead and play this clip for you guys while I set up something over here on the side. And here we go. Yeah, I'm going to start playing this right now.
And talk some crude. Hey, Brian.
Hey, I think you guys can hear me now. No one's ever said they couldn't hear me, by the way, Carl, to your point. So there you go. Listen, I think Jim's point exactly is spot on. Look at crude oil. It's up 9.5%, but it's not at $125 a barrel. You got Exxon up 0.5%, Chevron up 0.25%. You guys were talking about it. The markets, yeah, they're down a bit, but they're not collapsing. This is a huge difference from what we had last night. Jim was talking about waking up at 3 o'clock in the morning and checking the SPYs. I woke up at 3 o'clock in the morning just in a cold sweat, wondering where oil was going to go. I think a lot of this, I'd love to hear your guys' take, is options positioning. A lot of people, myself included, kind of caught out, not in a trading way, don't take any positions, but thinking that this would be maybe over or less severe 1 week out than it turned out to be. The Wall Street Journal headline, Iran, by the way, appointing Khamenei's son, kind of taking that hard line tone, fight to the end tone. And I think that caught a lot of people on the oil positioning out short, literally, where they had to cover last night. That sent the biggest single day oil percentage gain in history. What we were up 35% at one time. We're still up 10% right now at exactly 100 a barrel. Not saying that's good, but relative to where we were last night, it's not bad. One thing I want to note, when you look at an Exxon, when you look at a Chevron, when you look at a Marathon, some of these other names, they're at or even above the average analyst price target, guys. You look at ExxonMobil, it's actually a couple of percent above where Wall Street, as a consensus, there you go, says it should be. A Halliburton is still a bit under, but I do wonder if these stocks aren't responding because the trading desk, Jim, are kind of like, well, yeah, this is kind of where our analyst says the price should be. And the stock is, so they might have to raise it up or not. We'll see if the analyst community makes a change. Just one thing, we've seen production cuts or shifts, Saudi Arabia, Bahrain, UAE, Kuwait, and I want to be very clear on these Saudi headlines. So a lot of Saudi headlines going around. I don't want to say they're wrong, but they're confusing. You'll hear the term Saudis cutting production. My sources will tell me they're shifting production to different fields. Number one, you have drone attacks. But number two, to a different pipeline. It's not a cut per se as much of a shift. I know that's verbal semantics or verbal gymnastics, guys, but it does matter when you're counting the barrel.
First, Brian, you've been unbelievable in this, the best guy we have. Let me ask you, when you attack the desalination plants and when Israel attacked an oil facility, isn't that the kind of escalation that we really can't control right now?
Yeah, I think you're right, Jim. Listen, you made the point near the top of the show that you can't control the outcome, and I think that's where we are. I think, once you start a fight, you don't know how it's going to end. And I think there was, and I'm guilty of this, by the way, sort of an idea that Iran might take a little bit of a softer tone, that maybe this appointment of a new supreme leader by the Assembly of Experts might be somebody that wasn't pro-West. They don't have to say they like us, but would be less adversarial. With the installation of Khamenei's son, it looks like it's different. I'm not getting into Iranian politics, but my point, Jim, and I think to your point, is that the outcome here is uncertain. And when you've got Iranian drones and missiles and whatever it is hitting Bahraini refining plants and Qatari energy plants, things spiraled.
So they're obviously instilling a lot of fear in the market. Okay, they're talking on the CNBC. There's a legitimate worry to be worried about oil staying this high, because if oil stays this high, oil touches everything. Okay. Again, I'll get a little bit more into this during solid talk, but generally speaking, oil above $100 per barrel is not good for as far as logistics, production. It's in everything. It's in plastics, semiconductors, everything. It's used for everything. And if you get oil above $100, that means the cost of everything else will increase. And it's not so much the fact that everything costs more expensive. That's the bad part. The bad part is that it's a shock to the system. It came out of nowhere and it was not priced into the market. And now it's being priced into the market. So that was like their commentary on it. I don't believe they commented too much in the G7. So the G7 has like about $1.2 billion. I saw 1.2 billion barrels of oil. The G7 does burn about like 30 to 40 or even like 100 million barrels of oil a day. Now, it doesn't really matter exactly what these other, oh, the G7 has like 12 days. They're not going to release all the supply, okay? Like they're not going to release all of that. It's more of the sentiment in this. Now, I got a lot of posts on here. Actually, let me open up my my Twitter real quick because I did post about this last night. And I apologize for my voice, guys. Like I'm really trying to like not die right now on the screen because I can't even talk. And my kids certainly don't give me any bit of a break to not talk. I mean, just those kids are just wild all day, every day, all weekend. So we have over here that the G7 to discuss joint release on emergency oil reserves. And as soon as this was released last night, I was looking at the overnight markets. I was looking at crude oil and immediately it dropped 6%. I wasn't playing it to the downside. And, you know, it was actually a pretty interesting setup because when I saw like oil peaking like that last night, I was thinking about opening a short CL position. And it would have been pretty nice to catch that one, but I didn't catch it completely. I did catch a little bit, but like not a lot. And it was just like whatever. But they did come out this morning and say they were not ready to release it. Okay. So now that's not the thing. I get it. It's like, hey, they're not ready to release the oil. It's like, okay, fine. Yeah, that's not a big deal. But the thing is that this is a conversation for the G7, or at least it had been a conversation. So over here, a lot of news associated with this recovery from the end of the world as of last night when futures opened. The G7 reached a broad consensus that they are not ready to release strategic oil reserves into the market yet. But officials said the option remains on the table if conditions worsen. And also at the same time, President Trump said the administration is reviewing options to address the spike in oil prices, signaling that potential actions are still being considered. So it's clearly a problem, okay? Everyone can tell you this is clearly a problem. And I think the president knows this is a problem too. The issue is that he can't taco, okay? I know people are like, oh, he's going to taco. But it's like, in this case, he can't taco, okay? Why can't he taco? Because if he backs out of this war, it's still going to happen. Israel is still going to attack Iran, and they're still going to keep the strait closed. So at this point, he already opened Pandora's box. He can't exactly close Pandora's box. And that's the reason why this might last a little bit longer than we expect. This isn't like tariffs where he could just bring out this big board of all these tariffs, these retaliation tariffs, and the market can freak out. And just a couple days later, he can be like, you know what? I kind of was a little bit too exaggerating there. Maybe I'm not going to be so tough. Tariff deals, whatever. This isn't that situation. He can't do that. Because one, midterms are right here. So he's going to lose all credibility or a lot of credibility if he were to back out. But two, it's Donald Trump. He has to stand his ground. He's not going to give up. Like, when was it? Okay, he has tackled certain situations, but like this is literally like he started a war against Iran, right? And if you were to tackle this one, it wouldn't really look so good. And plus, he'll look like he's a pushover. There's obviously much more involved in that than a lot of people actually think of what I know too, because I'm definitely not a geopolitical expert. But I think we all know that he can't exactly tackle himself out of the situation as much as he used to with the tariffs. It's a little bit different. And that's probably the uncertainty the market doesn't like. The fact that they know he can't tackle out of the situation. So let's go ahead and move on to the next topic. I'm going to talk a little bit more about my thoughts on that one later. And then we had last week that MRVL Technology reported earnings. I do have a clip over here from Bloomberg that does discuss a little bit more in terms of MRVL. Actually, Gap did report earnings as well. I think the ticker symbol is GPS. And I mean, no one really cares about the Gap when it comes to earnings because it's nothing to do with the semiconductor story. Everyone cares about MRVL. And it was actually pretty interesting. Like I mentioned earlier, I was long MRVL before when I bought the dip and I sold it. And it was a lot of opportunity cost if I did hold that stock for that period of time. But I did, excuse me, I did buy back into it this morning on the dip. It is what it is. You're never going to catch a bottom with anything, but the charts do look pretty promising. So let me go ahead and play this clip over here of MRVL Technology, and we're going to talk a little bit more about that one. Here we go.
Boom in data centers. So this is a chip maker that said year-over-year revenue growth will accelerate through fiscal 2027 and actually grow faster than anticipated.
Okay.
So what does Marvel do? It's got these chips that are used in servers and networking systems needed to fire up all those data centers because of AI. So it expects revenue in 2027 to grow more than 30%. That's pretty enviable, to nearly $11 billion. Remember, we heard from Broadcom, another big chip maker this week, saying the similar things, and that AI chip sales are going to top $100 billion next year. Want to check really quickly, shares of Marvel Technology, like I said, up, what do you have it at?
Up 10% here in the pre-market trading.
There you go. Yeah, mine just popped up too.
Is that like comics?
You know, it's so funny
no,
you
this
say
is not
that.
Marvel. This is Marvel. This is the technology company.
Oh, is that how we say it?
That's how I say it. You know, I
think you just say it to differentiate it from Marvel Comics.
Yes, exactly.
Okay. Nutex Health plunging here 22%. This is a health-focused application software firm. Revenue for the fourth quarter missed the average estimate. And here's really the deal. A $55 million charge for arbitration claims.
Oh, boy.
Not sure what those were around, but that dragged down fourth quarter profit. Nutex is a company, $735 million market cap. It was already down 36% year to date.
Okay.
So,
no bueno.
Do we have time for one more? You want to do one more really quick?
Please.
Costco. No.
We don't need to talk about Costco. Not super important. All right. So Marvell Technology reported earnings. Now, what is Marvell Technology? They are a semiconductor company, probably a little bit more known as Baby Broadcom, as much as a chip stock investor. Nick keeps on mentioning all the time, which he's right in a certain sense, because Broadcom obviously develops the ASIC chips and the TPUs for Google, plus other companies as well. Marvell Technology focuses on certain hyperscalers. They build or they design the semiconductors or the Trainium chips for Amazon, or at least last time we heard they did. We don't actually know if they're involved in Trainium 4 or not, but I guess we're going to find out soon. And they also design the the Meta chips as well as the Microsoft chips as well. And that was their going thing for a while. And they're not exactly the most profitable company out there. But then they said something interesting in the last earnings, and also had the earnings display last quarter. And I will bring that up here on the fiscal.ai. Let me share this screen. Okay, so by the way, guys, if you guys want to check out fiscal.ai, you can check out the show notes at the bottom below, and you'll get yourself a code for 2 free weeks in fiscal.ai. No credit card required. Okay, so I use fiscal.ai for everything, and obviously I'm going to use it right here. So we have Marvell Technology earnings last quarter. I like to do by quarterly, but in Marvell's case, their quarterly earnings are like all over the place. So we'll just switch to last 12 months here to kind of even and normalize everything. They grew at 42% last quarter, last 12 months it grew by 42%. For the last 12 months, they were up about $8.1 billion. And let's take a look closer at the segment and KPI. So their data center is really going to be the crux of the growth over here. That's 6.1 billion, which is like 75% of all of their revenue. And the other is the communications and other revenue, which also is contributing as well. And data center grew at 46.5% last 12 months. So it wasn't so much how much this grew this quarter. It was the commentary and what they said for the next quarter. So let's go ahead and take a look at the Marvell investor relations page. We're going to bring up the presentation over here, and this is their business results. Okay, so if I look over here, and I would really recommend listening to the conference call. The conference call is really good. So I did already go over this. It grew quarter over quarter, 7%. And where was it again? And here we go, financial outlook. So next quarter, they're projecting $2.4 billion, give or take 5%, and gross margins up 51 to 52%. And for non-GAAP, it's a little bit higher, but let's just focus on GAAP for now, because they do exclude a lot of costs, especially operating expenses like SBC and so on. Diluted share count is going to be $883 million. Expenses is going to be a little bit higher. Obviously, you're going to have to produce more. You're going to have to expend more as well. GAAP profitability. So that's always good to see whatever comes to this company, because they've been like teetering back and forth on this one. Well, let's focus on this $2.4 billion. Okay. What they had said here, where was it? Maybe it was in the commentary. They didn't break it out. But what they had said in their earnings call, and this was actually very interesting because the last, I've been following MRVL technology for quite some time. Let me close this out. How do I stop this thing? Dude, there we go. I've been listening to MRVL Technology's quarterly conference call many times. And Matt Murphy is an interesting CEO because if you look at the MRVL chart, it kind of reflects how his company is doing in terms of the stock. Actually, a lot of CEOs do that. But last conference call, he sounded like super confident. Okay. And it's pretty interesting because usually the analysts come back and forth with Matt and the team, and they always try to paint him with certain questions. And, you know, some of the companies, you could kind of tell like he can't really think of the answer, or maybe he does know the answer, but it's not really what the analysts want to hear. But the last earnings call sounded very confident. And there are a few things that we can take away from this one. And I know a lot of people are talking about our rubrics. I'm going to get into that one too. But MRVL Technology could be an optics play here, or at least somewhat of an optics play. I did share this tweet yesterday or Saturday morning, I believe. Let me just bring it up over here real quick. It's a really cool graphic too. I've been messing around with these graphics for a while. So how come I can't, I can never seem to find things every single time. I got to bring it up over here. All right, here we go. Let me just share this tweet. So I have this chart over here of basically different layers of the optic stack. And we already know Kratos is part of the stack as well, MXL. Everyone already knows the optical modules, AAOI, which has been crazy running for a while, and then the laser and photonics, light and coherent, and then fiber optic infrastructure. So what exactly are optics? Okay, so if you think about Ethernet cables, right, which is the cable that connects your desktop to your switches or your routers, whatever it is, that is using copper wire. And then there's also fiber. Fiber uses light. So if anyone's ever heard of Verizon, Fios, or I forget the name of the other companies, but the thing is that these wires is like a bunch of glass insulated on the inside, and it uses light to either emit light or don't emit light, because a lot of this communication is like zeros and ones, right? Computers are binary. They run off zeros and ones. So if the light is on, it's a one. If the light is zero, the light is off, it's a zero, right? And if you put all of these together and aggregate all this data, you end up getting packets, right? Packets of data which communicate, and millions and hundreds of packets, millions and hundreds of millions of packets equate to data, an inference query, or so on. Light travels a lot faster than how much energy travels through copper, right? So this is probably one of the fastest forms of transmitting data across any medium in whatever we have today. The issue is that it's not exactly scaled out to meet the requirements of what we need in this world. But this is the reason why it becomes important, because when you think of training models, time isn't so crucial as far as training models. We've talked about this for the last 3 years. Inference is very important when it comes to querying LLMs, when it comes to grabbing new data from a database, and so on. Inference is important because you're basically hitting an LLM with a query and then getting your data back. But that like millisecond that it takes to get back, that additional few milliseconds, could cost you a lot of business. So you want this data to travel a lot faster. And this is the reason why Broadcom is trading so richly. And this is the reason why a lot of other companies are trading so richly, especially in the optics space, because it is the next leg to further speed the usage of AI and capabilities, right? So MRVL, they already are involved in this business in terms of retimers, basically speeding up the throughput of data through all of the cabling and mediums, right? So as they were discussing last quarter, is that they might be getting into this optic space or be able to help with the throughput in the optic space, which means that all of a sudden, we are all of a sudden have a bull case for MRVL that has to do with an already existing secular trend bull case, which is optics. There's other companies that are also involved in optics as well. VIA, which shout out to Stock Talk. He's been in this one for a long time. And then there's fiber optic infrastructure, Glow, CLFD, COM, and so on. Then Poet is something that's being discussed by the dude on Reddit, Serenity. And that's actually a pretty interesting one. I've been looking at that one too. Might be a little bit risk with that one because their profitability profile is not as good. But if we think about MRVL, even on the chart, let me go ahead and bring up a chart from MRVL. Hold on. Oh, the market caught a bid. Oh, that's dope. This thing is not opening up. Let me stop hiding this one. Let me share. All right. Oh, look at that. I have Wolf on there. That's cool. All right. So MRVL. And, ooh, nice. MRVL's catching a little bit here. All right. So if we look at the chart, this is what I should have went long this stock last Friday, actually, but I didn't. So you can't always catch the bottom. But this is pretty interesting here because if you look at this chart on the daily, it's basically been chopping sideways since last September. Okay. And even arguably, we haven't even been anywhere for the last 2 years in this stock, right? So you have all the moving averages here very compressed on the stock, meaning that it's poised for a move in a certain direction. Right now, it looks like that move is to the upside, which would be really cool if it did go to the upside because that'd be really good for my portfolio. But what's interesting here is that if you look on a lot of these time frames, a lot of the moving averages are compressed and it's trading above the 200-week moving average. It's trading above the 200-day moving average. In fact, right before the earnings, it closed below the 200-day moving average, which is just wasn't expected for their stock to go up so strongly in the last couple of days. If we look on the monthly chart, it's trading above the 21 month, right? Or the 21 EMA on the monthly. So it has been retaining, or it has reclaimed its bullish trend on the monthly perspective. On the weekly perspective, bullish trend. On the daily perspective, bullish trend. So in just a matter of a couple of days, this stock has like flipped from being a non-beneficiary of AI in general to now all of a sudden it's a beneficiary. And we've all seen what happens whenever a company goes from being not beneficiary to all of a sudden being beneficiary. Oh, that's interesting. IGV is underperforming SOXX by a lot. Oh, look at that. SOXX bounces off the 100-day moving average. See, guys, these charts really do matter. So where do we think MRVL is going to be? Well, MRVL's all-time high happened like all the way back here. This was all the way back in early 2025, late 2024. And I still remember this because I was buying MRVL down here and then trust me, I should have sold all the way up here, but I did not. But it wasn't that big of a position. This is when I started adding a lot back here as it was going down. I was adding to MRVL and Astera Labs, and I sold out of Astera Labs when it was above $200, and it's not even close to there right now. This is actually something I want to keep an eye on as well, but the profitability profile is not that great when it comes to Astera Labs. MRVL Technology obviously is profitable, but you've had a recovery of all these bullish trends, and it's pretty interesting because if you look at the volume, obviously had large volume the day after its earnings and is continuing to have pretty decent sized volume today. But this volume has just been flat or very low for like the last 6-7 months. So now all of a sudden you have the market looking at this stock and becoming very bullish it. And you put everything together, maybe it's starting to be something very bullish. People are saying oil is crashing. Oh, wow. Look at that. Oil just went red. That's interesting. Oh, there it goes. There it goes, guys. We have the tweet. We have the tweet, guys. It has happened. The tweet has happened. Let me share this screen for y'all. First of all, shout out to Fast Stock Market News. He was pretty fast in this one. Shout out to you, Troy. Trump says the war could be over soon. He just said it could be over soon, but the market is already like, let's go. The market's like, let's go. The war could be over soon. Listen, honestly, I hope it's going to be over soon because like it just sucks seeing like a lot of people die just because administration just want to put them in the front lines. But I don't know, whatever. USO puts. Yeah, you know what? It's actually really funny because I just said it's not a good idea to buy USO puts because the IV is so damn high, but also you need to be very strategic if you're buying puts on USO. Guys, the IV is so high. Even if USO drops, unless you're like in and out, you need to be like perfectly timing that thing because the decay is insane. And the only way that USO would kind of make sense is if you short it like with just shares, like you straight up just short USO, or if you buy in the money puts. But if you're buying out of the money puts that expire on Friday, dude, you need to be like very on time with that thing. So, I mean, yeah, I hope you're going to make money off of it. Yeah, dude, the market is like freaking pumping here. Holy cannoli. Woo, thing is crazy. Let me try to see if my voice is active. Let's go. Let's go. All right, so 3% on SOXX. That is very nice to see. And we have IGV lagging a little bit here. What if IGV? I wonder if IGV was like a fake bounce. That would be like very interesting because I did rotate some capital into Rubrik as well as ServiceNow. Like those are the two companies that I'm like very bullish on when it comes to software. But you guys know me. I don't like to buy falling knives or anything. I'd rather buy the recovery than buy the falling knife. Rubrik. Actually, was that it for the skit? Software. Okay, I'm actually on software and semi, so that's good. We already talked about MRVL technology. We'll go a little bit more into that later. But go ahead and follow me on Twitter if you want to check out more on that one. Yeah, I mean, Rubrik, it is above the 21 EMA, which looks bullish before earnings. I mean, you guys already, I'm bullish Rubrik, okay? Like, out of all the cybersecurity companies out there, CrowdStrike is super expensive, so I'm not buying CrowdStrike. I used to own it, and I already sold it around the 500 plus region. Palo Alto, you're not going to get a double on Palo Alto. Like, it is a very mature cybersecurity company. They own the entire platform. It's probably a good hold for a long term, even at these prices. But I'm not going to buy it because I want to get that risk reward upside, right? Rubrik is probably your best bet when it comes to my best bet, because I can't tell you financial advice, all right? So I can't tell you what to buy. But I would, in my opinion, I think Rubrik is probably one of the more sound cybersecurity companies to buy. Let me actually go ahead and check this out over here real quick. So I got Rubrik over here. And if I look at the 3-month chart on Rubrik, it's just been like a massive downtrend. So why did I rotate into Rubrik over here? So if I take a look at, they've actually only been IPO'd for like, was it a couple of years now? Because I think they IPO'd in 2024. Yeah, May of 2024. And I was like buying it down here, and I added it to recently. And then the interesting part is that like they were trading all the way up here, like around $100 or something. And they've just been massively trending down. But if you look at, if you look at IGV, like it's no wonder the entire IGV thing has been getting hit for like the last like 6 months or something. So it's no wonder that all of these cybersecurity and all these software stocks have been getting a massive hit. Now let's look at ServiceNow. ServiceNow actually was trading near its all-time high less than a year ago. It was like above here, like around 206. And then now it's trading all the way down here at 122 and 122. So we could be having a little bit of recovery over here. Let's go ahead and take a look at the technicals over here for Rubrik real quick. And also ServiceNow, because it's definitely looking a lot better than it did before. Rubrik, I already told you it's above the 21 EMA, and you have the 9 EMA flipping over the 21 EMA, which is a recovery of the short-term bullish trend. It's above the 20-day moving average. But if you look in the weekly, it's still not looking so hot, but it is nice to see this bit of a bounce here. And at these levels, I would think Rubrik is still a good buy. ServiceNow, same thing, a good buy at this level if you're holding for a long period of time. Tactical trades and software right now is just, it's a little bit iffy because you have to get this continued thrust into the upside when you think of these software stocks in order to capitalize off it. And you guys already know I have a big position in Zeta, and I'm still long Zeta. And it is good to see that it's creeping up here back above the 100-week moving average. And then on the daily, it's coming back up here. It's retesting the blue line over here, which is the 50-day moving average. So bullish, Rubrik, Zeta, and ServiceNow. Let's see, is Grab red today? Can't get enough of this, man. Can't get enough of this. Venture Global. Oh, yeah, this thing's going to pull back. Guys, if energy is pulling back, Venture Global is going to pull back. Because, look, this started going up after the war. So if we price out the war, this is going to get hit. So you got to kind of be careful and take some profits here if you're riding this very short term. Long term, it is what it is. You know, this price today doesn't even matter. But, yeah, oh, man, this thing is just ripping right now. It's crazy. Oh, MRVL, let's go. Let's go. Oh, look at that. On Semiconductors back up 3% today. That's good to see. What else is going on the SAM port over here? Oh, I got to take up stuff. I did sell ACLS, got out of the position. It is what it is. And I added MRVL here, and I also added more to Fastly. So I already had Fastly in the portfolio, which is great. MRVL's in the portfolio. Ampex, I've been in this one since $11. IRDM, got a small position in that one. And I got out of IREN, and I got out of Lemonade. I was just looking at these ones. I didn't get back into Simo, Silicon Motion. I don't know, maybe this chart can come back, but actually they recovered some pretty decent size over there. But yeah, so what do we think about Rubrik coming into earnings? I mean, you have to understand the story here. When you think about cybersecurity, you have endpoint cybersecurity management, which is your CrowdStrike, your SentinelOne, Also, Palo Alto does have a product. Sorry, not Falcon. Cortex AI is, I forget exactly the name of Palo Alto's endpoint security client product, but their entire platform does include endpoint. Zscaler is more of network security, and Palo Alto is also in there as well, as in addition to Fortinet and so on, a bunch of other companies. Rubrik is more of data security. So data security is important because in this case, you have a lot of backups going on in your servers and your environments, and Rubrik take care of that for you. But they also scan all of the backups, so that way, if you have like a big incident, like let's just say, I don't know, the CrowdStrike outage we had like a year ago or 2 years ago, Rubrik can restore that for you and make sure that data is not corrupted or anything, meaning that it's not going to contain the issues that occurred when CrowdStrike upgraded its kernel. So if Rubrik is getting into something called agentic AI security, maybe that's something worth exploring. Maybe it's a little bit more important than people expect, not just from a cybersecurity data security platform, but also protecting the permissions and the rights in terms of navigating where these agents are accessing around your entire system. Because in order to use an AI agent, it needs access to databases, applications, programs, and whatever web apps you're running, right? So it does these things on behalf of you, right? If you're using Claude and it needs your authentication with your Google account in order to make calendar invites on your behalf. So who's governing that? Well, when you give it full access to your Google Calendar, it can do whatever it wants. Now, I know if you're using Claude, maybe it's not that big of a deal, but if you're telling Claude to do something and you have no idea what it's spitting back at you, and you just say, okay, go ahead and do it, it might delete all of your events. So what you might want to do is restrict the agent from deleting calendar events. And that's where Rubrik comes in, not in that specific entity, but if you think an enterprise scale, there's a lot of measures to be put in place so that way these agents that these hundreds of engineers are running against all these LLMs all day, every day, doesn't start breaking things, right? And that's the thing about governing these permissions. This is the reason why Palo Alto acquired CyberArk, because the security and permissions of these agents is going to be very important. And Rubrik is already ahead of the curve by doing that. The thing is, though, is that what makes Rubrik more attractive today is not because its chart looks a lot better than it did a couple weeks ago, but also its valuation is a lot better than it was when I was trading at $100. So let me go ahead and share this screen over here of Rubrik. I've been talking this whole time with this screen over there. That's great. All right. Let me go ahead and share this one. So Rubrik on its ratios over here, let's see, it's forward metric, forward valuation. I like to use EV NTM sales over here. And then we're going to go by quarterly so we can get those exact numbers. Damn, this market's going wild right now. Crazy. It's trading at a 7 times EV NTM sales. When it was trading at $100, this thing was 15 times, which is crazy expensive. Okay. So if we look at 7 times NVNTM sales, that's not too demanding considering its average. It's actually trading near the cheapest it's been trading since it IPO'd on this metric, right? So also on top of that, if we look at their financials, let me go to their income statement, and they are not a profitable company on a GAAP basis, but they are profitable free cash flow wise. They're growing at 48% year over year, $350 million last quarter. Now let's look at the Rubrik IR for actually, no, you know what? It's probably better to look at the estimates from Wall Street. That'll be a better gauge in what's happening here. So next quarter, they are expected to come in at less than 350 million, which is setting the bar pretty low for them. And then an annual basis for 2027, which would be this year. Let's look at 2028. That'll be the end of next year. They're expected to come in around $2 billion, right? So if today on the actual, they're about, I think they're about $1 billion. Why does, oh, this is the annual one? Yeah, they're at about $1 billion when it comes to annualized revenue. Last 12 months. Man, I don't know if you guys can hear my kids in the background, but those kids are wild right now. Last quarter, they came at $1.2 billion. Okay, so that means that in about less than 2 years, they are expected to get, actually, no, they just did report. Hold on. I think they're 1 year ahead in terms of the fiscal calendar. Let me share this tab. Yeah. Okay. So they are fiscal year. Yeah, they're 1 quarter. They're 1 year ahead. I don't know why these companies always do this all the time. So this is the last earnings over here. And if I scroll down here to subscription ARR, this is going to be your forward metric as far as what they're going to end up realizing as far as revenue goes. Their subscription ARR is at $1.35 billion. And their cloud ARR is 1.17. And the targeted future model, of course, is to have more subscription ARR versus cloud, which is what we're already seeing, but they expect the cloud to catch up a little bit over here. So let's look at their guidance for next quarter. Okay, so actually they give the guidance for next quarter, 340. They're going to beat this one. They usually do beat it all the time. They're guiding for the entire year. That means the end of this year, $1.5 billion. So if they're growing like about 30%, 1 year from now, growing at 30% is definitely above. That's if they like slow down revenue growth 30%, which I don't think they will. I think they're still going to keep it like 35, 40%. That means you're going to beat the Wall Street estimate that they have over here for next year at $2 billion. You're probably going to be above that one. And it's very likely their profitability metric is going to be a lot stronger. So they already are going to be free cash flow positive at the end of the year, about $200 million. So they're looking at about 15% free cash flow margin. And their non-GAAP EPS is just shy of 16 cents on a negative basis. And they are expected to have 197 million shares, which is better than just the end of this quarter. So that's always good to see. The subscription ARR contributing margin is 9%. So we're probably going to get guidance for next year in this quarter, which they are actually reporting. Let me look at the earnings hub. I think they're reporting, is it tomorrow? Yeah, Thursday, actually. So they're reporting on Thursday. They're expected to come in. Yeah, I think they're going to be beating this number likely. So a company's trading pretty cheap at this point on a historical basis. And if they do have a good quarter, they're likely going to rally. But I think a lot of this really just depends on where the market is at as far as software stocks go. So if we look at software stocks here, yeah, you know what? Software just turned green today, but semiconductors up like 4% of the day, which is really good to see. Something just happened to the Qs. Holy moly, guys. We are ripping. Wow. I mean, I'll take it. Jeez. Look at that candle. That is a massive bullish engulfing channel right there. Dude, we were all the way down here last night. This is crazy. I mean, I'll take it. I'll take it because I am definitely not short this market. But like the question is, are we going to hold this? Because how many times have we done this against a 50 EMA on the Qs and just got rejected? Are we going to hold it this time? I really hope we hold this time. But look at this. This is the same thing every single day. Boom, gap up, open down, gap up, open down, gap up, down, up, down. Like this happens all the time. I mean, I don't know how you guys want to play this, but like this is the reason why I'm not like trying to do anything crazy as far as like short-term options. Like you want to have like something that actually expires like at least 6 months out. Why is the market ripping? The market is ripping because Trump just said the war is ending soon. The war is completed. Get out of here, man. The war is not completed. Why does it say 11:39? It's not 11:39. My time is wrong. Yeah. No, yeah, it is a relief rally. It is a relief rally. Hey, I'm not telling you to sell covered calls. All right. I am not giving financial advice. That's all on you, man. That's all on you. If you want to sell covered calls, go ahead. I'm not selling the covered calls here because this market's crazy. USO dumping hard. Is it dumping? Wow. That thing is dumping hard. That's crazy. All right. So how much of those puts that I was looking at this morning? I didn't buy puts. I should have bought puts. I didn't buy puts. Damn, dude, this market is freaking heck. Wild. All right, let's look at those puts that I was looking at this morning. God damn it. They're 400%. All right, whatever. It is what it is. These USO puts that I was looking at this morning, the 90 puts from this morning, they were like $5. Like not 500, but like 5 cents. And they're at like $1 something now, which is just wild. I mean, I don't know. That's taco. I said he's not going to taco. And the dude just tacoed. He just tacoed. He just tacoed, guys. He just tacoed. Oh, wow, Path. Are you? Give me a shout out if you're long Path, because that dude Jake is long Path. I don't know, man. I hope he makes it back, because that would be crazy. AHR. Oh, Crossroads in the house. Crossroads in the house. Yeah, you know what? The optics trade is probably back on the table now that everything's resolved, or at least some resolved. AAOI is up there. AmpX. Yeah, let's go. Yo, AmpX. Drone battery technology. Let's go. Yeah, semiconductors are back, guys. Semiconductors are for sure back. They are back, apparently. Look at that TSM. SanDisk is at 10%. Guys, this is a massive short covering rally. I really feel bad for people who are trying to short this market this morning. Oh my goodness. They probably got their butts served to them on a platter. You know what? Shout out to my BM&R guys, because like, I didn't even type right. RM&R. You got a lot more to go. You got a lot more to go over here to recover. But you know what? Shout out to you guys for holding strong. Oklo had news this morning. They're partnering with Centrus Energy. They're going to be partnering with them on a project that's like right next to their 1.2 gigawatt power capacity plant that they are planning. So it's not there yet, but they're planning to do it. So we'll see what happens there. I mean, you know, if Oklo comes back, ooh, look at that. Kind of pull back a little bit, because that was a massive move. But yeah, no, that'd be crazy if like this thing holds it. If we get a fall through into tomorrow, that'd be wild. If we get a fall through day, like look at this massive bounce in the Qs, man. That's crazy. All right, so solid talk. What do I think is going to happen? We're going to wrap this up in the next couple of minutes. I want to get you guys out of here. Well, I mean, it is nice to see the market was going to come back, and I'm not surprised to see a massive short covering rally that we see right now when you have like any bit of optimism, because when you have the market on one side of the boat where they're all like, you know, we're hitting 200-day moving average on SPY at 655. Everything looks like crap. Oil's going to go to $200. You know, it's like when you have all this stuff, it's like so much FUD out there. People are going to get scared. They're going to sell stuff. Okay. And I know you guys probably didn't get scared. You probably hung around, just chilled out for a little bit. But a lot of fund managers have risk tolerance they need to abide by. So this morning, the VIX was like above, I think it was at $35. What was the VIX at this morning? Yeah, the VIX was $35. That's crazy. You can't have that much risk in the market as a fund manager when the VIX is at $35. The fund managers can't be like, you know what, guys, it'll come back, right? They're going to be people blowing up their phone, saying like, what's happened to my money? Am I losing all my money? I don't want to lose my money. Sell everything, whatever. They gotta talk to the clients. They have risk parameters. They got to sign by this. It's not exactly the market where fund managers can be like all in, right? As retail investors, we have that privilege to do that sort of thing, but fund managers can't do that. They have to abide by certain policies. So when the VIX is at 35, they have to sell stuff, especially people who are margin called. They have to sell stuff to cover the margin requirement. And this morning, all of them were probably screwed, or they were thinking they were screwed. And then you get today, after Trump says that the war is going to be over soon, after he just said the other day or yesterday that the war is going to last. He doesn't know how long the war is going to last for. Like, I guess that's a taco. That's a taco situation. But don't get chopped up back and forth. This like prematurely shorted the market is going to put you in the scenario we're in right now, right? We haven't really had a sustained correction yet. In fact, we haven't even had a correction since April. And even then, we haven't had more than a 5% plus drawdown on a closing basis. I think we were more than 5% at last night's lows. Actually, let me bring this up real quick, and then we're going to close this one out. If I look over here, if I go from all the way up here to the all-time high, all the way down here, yeah, we were only down 5%, but it felt like the world was falling off a cliff. The Qs were a lot worse, though. The Qs were definitely a lot worse. So if the Qs all-time high was over here, as low as here, 7% drawdown, so a little bit worse, but the Qs are definitely recovering quite a bit more than the SPY in its own. Even XBI is coming back. Oh, wow. This had the biggest recovery today because IWM was down a lot. Yeah, that's a 4% swing right there. IWM from its all-time high was all the way up here, is down almost 10%. So, I mean, IWM is definitely coming back, and that one is actually outperforming the Qs right now, which is very surprising to see. So, yeah, guys, we will see what happens with this market. I mean, I'm just going to hold. Like, what else is there to do? There's really nothing else you could do here. Yeah, there was some dips in some software stocks, but besides that, like semiconductors were still like very high up there. I didn't really want to buy the dip in those because what if we were to go lower? You know, semiconductors would have a little bit more room to go down, given that a lot of it's very far extended, but at least things kind of came back a little bit to reality in the last few weeks. So things were better priced, but still, I mean, it's hard to be bullish like in the very near term when we still have a lot of uncertainties on the table. But it is nice to see when the market recovers more than a few moving averages. We're going to close over here right at the 20-day moving average on the Qs. So we'll see what happens with that one. Let's go ahead and check out something here real quick. Yeah, we don't really have any earnings after hours today. LifeMed's reporting today. Casey's reporting today. HPE. Yeah, nothing too crazy. Tomorrow is going to be a big one. Tomorrow, Oracle's reporting after hours. So it's going to be a big market mover. And Oracle right now, is that still 3% down? Oh, it's only 1% down. So, I mean, best of luck to Oracle. Hope that one turns well. But yeah, guys, thank you for tuning in. Really appreciate you. I did have the public.com window open before. So if you want to check out, open up a public account, you can use a promo code on the Wolf page. Also, Fiscal AI in case you want to check that one out, guys. But really appreciate you. Thanks for coming by. Hopefully the voice won't be as raspy tomorrow. It'll be a lot better. If not, your boy's still going to be here, right?